Hello everyone, welcome to today's video about Meta Platforms ahead of its upcoming earnings, which are due in Wednesday, July 26. After a bad 2022, the social media giant seems to be getting its mojo back with a series of initiatives to which markets have reacted positively. These include cost-cutting measures, renewed focus on artificial intelligence, the launch of a Twitter rival text-sharing app, and more. This is what we will be talking about today. Just to timestamp this video, it is being recorded on Friday, July 21, quite a few days ahead of the actual results. I am your host, Nikos Zabouras, Senior Market Specialist, and before we begin, as always, please read carefully through the risk warnings and the disclaimers. Okay, let's go on ahead and get started. We're gonna start with some of the things that we've seen from Meta this far, because it's having a strong 2023, and we're gonna see some of the aspects of it, and then we're gonna talk about the upcoming earnings results for the second quarter and what we will be focusing on. So, CEO Mark Zuckerberg dubbed 2023 the year of efficiency and vowed to make the company stronger and more nimble. He implemented cost cuts measures, which included massive layoffs following the pandemic era hiring spree, in line, of course, with what other tech giants have been doing. That was music to the ears of investors who have been calling for such action for a long time. Cost and expenses shrank more than 15% in the first quarter, sequentially, to a little over 21 billion, and the tech behemoth also slashed its 2023 forecast by $5 billion, expecting total expenses around 86 to 9 billion. So the first signs are that this is actually working in markets like that. Now, the Meta Platform also launched a new application to rival Twitter. It's a text-sharing application. Now, Twitter, after the acquisition by Elon Musk, has undergone a turbulent period, and many companies and advertisers are concerned. So, the CEO of Meta probably smelled blood in the water and decided to expand the firm's grip on the social landscape with a rival application which was launched in July, a couple of days back. This new application leverages the link with Instagram, and signups surged to over 100 million users in the first few days. And you can see on your screen a relevant Threads post by Mr. Zuckerberg where he's talking about these signups. Now, we have listed this as a positive, but it remains to be seen if it actually is. The fact that Meta decided to do that, I think it's good. It's showing that it's again confident, and that's definitely a good thing. Trying to get into a new market, essentially, but after a bad year, it's trying to cut costs, and this may not be easy to achieve. So, as I said, remains to be seen. We view it as positive at this stage, but remains to be seen. Now, the social media giant has been doing AI, artificial intelligence work for a long time, but its energy seems to be concentrated on the metaverse recently, last year. However, after ChatGPT, that took the world by storm, Mr. Zuckerberg put renewed emphasis on that, and in late February of this year, he announced a new product group focused on generative AI in order to turbocharge the firm's work in this area and to leverage the technology for improving the firm's services and platforms. And that's what you're seeing. You're seeing this Facebook post from Mr. Mark Zuckerberg. This week, the company made another move into that because it made its own open source large scale language, which is called Llama 2, available on Microsoft Cloud. So definitely renewed emphasis on that, and that's a good thing because that's what the whole tech sector works in, Microsoft, Alphabet, and others. Now, of course, markets generally like those initiatives, and along with the improved financials and an improved advertisement environment, the stock has been doing well this year, very well actually. To be honest, because it has more than doubled in the stock price has more than doubled in the first half of the current year after the 2022 slump. And you can see the chart is also telling about how markets have reacted to the earnings. So last year's collapse, we would say, was sparked after the Q4 results of 2021. You can see on the far left side of the chart. But then you can see how this year, at the beginning of the year, and the Q4 2022 results, markets reacted positively, and then again with the Q1 2023 results in late April. So you can see how markets have reacted and how the stock has been on a surge this year, covering being very close to the record highs at 384.49. That's we're not gonna talk too much about that. The technical outlook is not what we're trying to talk about here. So let's go back to our presentation. Now, let's go and tie these factors in the context of the Q2 earnings results. Let's see what are some of the baseline expectations. So the results for the second quarter are due on Wednesday, 26 July. And as per investing, revenues are projected to grow at 31 billion, which would definitely build on the encouraging Q1 results when the company returned to revenue growth on a yearly basis. Meta's own projections are around this region as well, 29.5 to 32 billion. And the earnings per share are forecasted at 2.89 per share. That would still mark a significant sequential improvement, but would be smaller than the year ago figures. Now, these figures themselves don't necessarily tell much, so let's go and see what we will actually be focusing on. Of course, financials is going to be one. Meta derives its revenue from advertising, which had taken a hit last year, but the Q1 results showed recovery. So can this continue in Q2? Based on the projections, it looks like it can, but we will be waiting for the figures. Now, net income also in focus. It had dwindled on a year-over-year basis in Q1, but the figure was significantly higher from the previous quarter. And operating margin strengthened on a sequential basis as well, 22% in Q1, but year-over-year the comparison was not that good. And of course, Reality Labs continues to burn a hole in the balance sheet, so how that's another thing to see. And in general, how the cost-cutting efforts are progressing. Will expenses, we talked about how expenses shrunk sequentially in Q1. Will they shrink further in Q2? Now, user metrics are also gonna be another focal point, perhaps not the most important, but still significant. As you can see on the graph, Meta's user base has been expanding in recent quarter. The family of apps, Messenger, Facebook, Instagram, and WhatsApp, crossed the 3 billion mark in daily active users average for the first time in history. Facebook also itself grew to 2.4% billion average users. Again, this is average daily active users. Now, these figures show that the firm's effort to fend off rivals such as TikTok and others with, for example, short-term videos are working. According to Mr. Mark Zuckerberg in the last earnings call actually, Reels is gaining share. So we want to see if it can keep up this momentum and continue to expand. Now, the metaverse, a heated topic we would say. Meta spent too much money and resources on the metaverse last year, and investors did not like that, and that of course showed on the stock price, because it was a challenging environment for the tech sector and in general, and the metaverse had little to show for. This virtual world remains obscure with no broad consumer appeal and burns actually money for the firm. It looks like the firm has quietly shifted its focus away from the metaverse, at least the immediate focus, and in any case, the metaverse was supposed to be a long-term project, and shifted its attention toward generative artificial intelligence after, of course, ChatGPT took the world by storm. Now, part of the metaverse is also the mixed reality headsets that Meta puts out, and it launched a new headset, the Meta Quest 3, which is scheduled to ship this fall. The market, however, will be having a new contender. Apple, unveiled an AR headset which appears superior on all aspects, but of course it has a massive price tag. But Apple's end may actually be good for Meta as well, since it can help lift the market out of obscurity. So anything around the metaverse, around AR goggles will be something we will be looking out for, any commentary around that. Now, artificial intelligence, we already talked about how the company is focusing on AI and mentioned some of the recent developments. However, it has a lot of catching up to do. Any updates around those efforts, around how it improves its platforms and all that stuff, again, commentary will be important if we get anything more around that. And last but not least, Threads, the new Twitter-like application. It made a good start with a huge number of signups really fast, but now it's about retention. Twitter still seems like a more complete, I would say, platform. And despite its problems, it won't be easy to knock it off. And I don't think that Meta actually has any such immediate plans. Of course, that, I guess, is the goal, but I don't think they can achieve that. They believe they can achieve that immediately. So, any updates there? How retention, are people coming back to the platform? Have signups increased more? What's going on there will be important. Meta, we have to say, does not have a great track record in terms of standalone applications. And as we said, there will be challenges in developing and improving such a new product while trying to cut costs at the same time. So these will be some of the things we'll be looking for. Just to sum everything up, the results are due on Wednesday, July 26. Meta had a brutal 2023, but took action to address the issues. Expenses are coming down. It puts attention and focus away from the metaverse and into artificial intelligence, and also launched a new application. It looks like it's getting its mojo back, but beware, the Magnificent Seven had a poor start with Netflix and Tesla, which actually showed that investors don't get easily impressed this time around. And even if we got good figures, good metrics, they will need to also have strong and clear guidance. So that's it from me. Thank you for joining me.